Okay. All right. So when you think of life insurance, the first thought you may think about is supporting your loved ones in the event of your passing. Okay. But some life insurance policies can actually become a financial asset. Okay. And I'm sure you've heard of them. But tonight we're going to go deep. We're going to talk about these insurance policies that allow you to build cash value over time and provide you access to that cash during your lifetime. Okay. And so if you play your cards right with these policies, then you can avoid a tax liability as well. Okay. So in this video, I'm going to uncover how women can use life insurance to not only protect their loved ones, but to also build financial independence. You're going to learn some surprising strategies to help to close the wealth gap and to take control of your financial future. Okay. So if you feel like, oh my gosh, I don't know how I'm going to catch up, we're going to handle that tonight. We're going to talk about that tonight. All right. And so if you are new to me or to my channel, I'm Katrice, and I am a licensed health and life insurance broker. And on this channel, I teach entrepreneurial women how to use life insurance to increase their wealth, financial literacy, retirement, and estate planning. You'll also get some mindset and financial astrology content sprinkled in. So if that is your vibe, welcome to the tribe. So as you are watching this live, if you are being enriched by the content, please do give it up. Comment in the chat. I want to interact with you. I don't want to just talk at you. I want to interact with you. So please comment in the chat. Um, and let's get started. Okay. So the first thing I want to talk about tonight is the wealth gap because the wealth gap is real. Okay. So we know that men make more than women. Okay. It's a fact, especially in corporate America. Now, as an entrepreneur, um, we women kind of have it's kind of like a level playing field when it comes to entrepreneurship because there's no cap on how much you can make, right? But if you're watching this and you're not an entrepreneur or you're a part-time entrepreneur, then in corporate America that there is, men do get paid more than women, okay? And this wealth gap contributes to the pay gap contributes to the wealth gap. Okay. Um, and so the gender wealth gap focuses on own, how much you own and keep. Okay. And so the value of your assets, which includes cash, investments, real estate, minus your debts. Okay. And so the wealth gap is a way much bigger problem than the gender gap. Okay. Um, because one thing that we all know is that women can, we in a relationship, okay, it's good for you to have your own. It's good for you to have your own money, to make sure you're making your own money. You have your own savings separate from your husband, okay? Everything should not be commingled, okay? Because you do have to think about what if, okay? What if something happens, right? And it's not that you're wishing for something bad to happen. It's just that you are making plans for the what ifs. Okay. And that's pretty much what insurance is. Insurance covers the what ifs. Okay. And so um, now we do know that, like I said, women make less than men. Okay. And then when you break it down by race, it's even it's even worse. I think overall, women make 82 cents for every dollar that a man makes. And when you're looking at the wealth gap, for every dollar that a white man owns, Women overall own just 32 cents. Okay. And then Black and Latino women, it's just a penny. Okay. And so we have got to shift that narrative. Okay. And so it's really hard to pin down exactly how big the gender wealth gap is for a couple of reasons. So, first, people's wealth change over their lifetime. Okay. So, age can skew the results. So, a 22-year-old with student loans um, or a 44-year-old with student loans probably has a lot less wealth than a retired surviving spouse who owns a home. Okay. And also, you have to look that wealth data is collected at the household level rather than the individual level. So, meaning that a lot of women's wealth data is typically mixed in with a male partner. Okay. Um, and so, let's talk about how I want to transition into how the traditional financial tools don't always address these challenges effectively. Now, if you are enjoying this content, please do give it a thumbs up. If you have questions, please do put them in the chat. Okay. So when you're looking at the marketing of financial management. It is really targeted towards men, okay? And it's not targeted towards women, okay? And men will have met with the financial advisor nearly at twice the rate that women have, okay? And the comparisons for life insurance ownership also echo those same sentiments, with men, 53% of men reporting to have life insurance versus 46%. Okay. And women also tend to have less knowledge about personal finance than men do. Okay. And so it's little things like this that we have got to focus on. And a lot of times, the reason that women don't have life insurance or they're not utilizing life insurance to build up their wealth is because they don't understand it. And when you tend to not understand something, you stay away from it. You're like, I don't understand it. It's confusing. I'm not going to get into all of that. Okay. And so you first want to start with financial literacy. Okay. You have to become knowledgeable. You have to become aware about the tools and the things that are out there just about money. Okay. Just become literate about money. Okay. If you're wanting to build wealth, then you're gonna want to immerse yourself in education about money and building wealth and things of the sort, your finances. Okay. And so first let's talk about just the different types of life insurance. Okay, that's available. Okay. So there's really two buckets of life insurance. Okay. There is term insurance. Okay. And then there's whole life. Okay. Now, life insurance is a contract between an individual and an insurance company where the insurer agrees to pay a designated beneficiary a sum of money upon the passing of the insured person in exchange for regular premium payments made by the policyholder during their lifetime. Okay. And so you have term life, which term life is for just a specific term. So say 20 years, 30 years, something like that. Okay. Whole life is just what it says. It covers you for your entire life. Okay. Now, the difference between the two, obviously, the coverage, how long you'll be covered, but also the cash building component. Okay. And that cash building component is truly what separates whole life insurance from term. Okay. Now, term insurance is not bad. You can use term insurance to your advantage. Okay. If you are wanting to, you can use it to your advantage to get while your children are young. You know, you can. get a term policy, and if something were to happen to you, then they could take the proceeds from the policy and they could live on. Okay. So in term, you can get it like really large amounts. And it's normally a lot cheaper. The premiums are a lot cheaper than whole life. Okay. Um, so term is not bad. No insurance, really, honestly, in my opinion, is bad, because they are just tools to protect your finances from a catastrophic loss. Okay. So now, when you look at whole life insurance, or it could also be, you might hear people say permanent life insurance. That's whole life insurance. Okay. Now, there's two main types of permanent life insurance that can be used as an asset. Okay, actual whole life insurance, and then there's universal life insurance. Okay. Now, whole life insurance, this is the most common type of permanent life insurance. And so, in addition to the death benefit, it also offers the policyholder the ability to accumulate cash value. Okay. And so, that cash value is where the policy turns from being just paying out a death benefit to where it kind of turns into like a savings account that you can tap into when you need cash for something. Okay. Um, your cash value will accumulate over time at a minimum guaranteed rate as indicated by the policy. Okay. And so you just want to make sure that you read the fine print of the policy to understand what the rates are. You also want to know, about how long you need to keep it in before you build up any cash value. Um, and also about loan taking out, if when you're ready to take out money from the policy, how does that work? Okay. What's also noteworthy is that the premiums on these policies typically don't increase over the life of the policy. Okay, so if you get a whole life policy, then the premiums, they pretty much stay the same. Now they are higher than term. Okay, term, when you take out a term policy, those premiums pretty much stay the same as well. But they're just a lot lower because they are not guaranteed to cover you over your entire life. They're only for a term. Okay. And so that is what makes the premiums a lot lower. Okay. Now, the other type of permanent life insurance is universal life. Okay. And so universal life policies, they function similarly to whole life, where which as they allow the policyholder to grow an asset by accruing interest over time that can be borrowed against. Okay. Now, with universal life policies, the premiums aren't set, so they are subject to change, and there's also no guaranteed rates on your money that your money will earn over time. Okay. Now, under the umbrella of universal life, there are variable universal life insurance policies and IULs, which are index universal life. Okay. Now, I know you've probably heard a lot about IULs. They are they're part of the Be Your Own Bank concept, and they're really good tool if they are set up properly. And so you want to make sure that you are working with an agent that is qualified to set up that properly. Okay. Um, because if it is not set up properly, it you'll be mad. You'll be mad because it's not going to be accruing, compounding the interest properly. And there are policy fees and things that you have to pay. And that's with all insurance. They have policy fees. And so if they're not set up properly, then it's like it can be ate up by the fees, and then it could balloon. And then you're going to be pretty upset because it didn't do what you wanted it to do. So you just have to make sure that you are working with a qualified agent who knows how to set those policies up properly. Okay. Um, but with the IULs and the variable lives, because they have that influence from the market or mutual funds, it gives them the ability to grow cash value at a faster rate than whole life insurance. Okay. So you use them both for cash value, for the cash value component as an asset. But the IULs, you will earn more versus the whole life. Now, whole life policies are good for children, okay, um, or really, really young people. You not saying that you can't get a whole life policy in your 40s, you definitely can. But the cash, you want to start as early as possible with any of the products to as far as life insurance, you want to start earlier so that you have that cash value growing. You know, the longer you have the policy, the more cash value you will have. Okay. And so you definitely want to start younger. However, if you are watching this right now and you don't have life insurance, then you need to get life insurance. Don't let your age, don't think that you're too old to get life insurance. You're not too old. You may have to pay a little bit more than, if you were younger, but you still need to get life insurance. Okay. Unless you have some other means in place to pay your final expenses, and your final debts and things, and, still have money left to pass to your heirs. Okay. All right. So how really does life insurance build wealth, and how can you use the money that's been accumulating? How do you get access to it while you're alive? Okay, so there's several ways that you can use your life insurance as an asset. Okay, as you contribute to the policy over the years, you earn the ability to borrow against what you've saved. Okay, so remember how I said earlier, you can look at these policies like a savings account. Okay, all of your earnings are growing on a tax deferred basis. Okay, so whatever you got in the actual bank, you're going to pay taxes on that. Okay. But on the life insurance, it's growing tax deferred. So you're not having to pay taxes on that right now. Okay. And so you can take a loan out. Okay. One way you can take a loan out, you can get money out of the cash value is to take a loan. Okay. And so you can borrow against the cash value of your permanent life insurance policy. Now, you do want to read the fine print before you go into it, um, to check out the interest rates, see if it's a fixed or variable rate. Now, before you actually purchase the policy, if you are working with an agent, they should be explaining all of this to you. Okay. I would not recommend that you just go online and try to put in a quote and just purchase something, especially if you really don't understand in life insurance. Okay, if you don't understand insurance, I definitely wouldn't say, hey, just go online and get life insurance, because that's not a good option, because you could end up purchasing something that may not do exactly what you thought it was supposed to do. So you want to work with an agent such as myself, so that you will know exactly what it is that you are purchasing. Okay, and you can understand it and you can ask questions in real time. Okay. Um, Now, if you take a loan out against your policy and it is not paid off at the time of your death, any outstanding balance that you owe gets subtracted from what your beneficiaries inherit. Okay. So you can take a loan, you can borrow against it, but you always want to make sure that whatever you borrow, you pay back, so it doesn't come out of the money that will go to your beneficiaries. Okay. Now, another thing that you can do is you can withdraw money. Okay. Like I said, if it's a savings account, so you can withdraw. Okay. So the loan you take must be paid back, but the withdrawals you don't have to pay back because you're actually withdrawing. Okay. Now, if your withdrawal amount is great enough to dip into your investment gains, then you're going to need to pay taxes. Okay. And like a loan, like the loan, if you took out a loan on the cash value, the amount you withdraw is money that will not be paid to your beneficiaries. Okay. Because the withdrawal decreases the value of the policy. Okay. Now, I don't ever recommend for my clients to make any withdrawals. Okay. If you want to get money from your life insurance, take out a loan. Okay. Take out a loan, one, because it's tax free, and two, um, you can pay that back. Okay. It's money that can be put back. Okay. Now, you can, another way that your policy can be an asset is that you can use it as collateral for a loan. Okay. So, in some situations, you can use your life insurance policy as collateral for a loan, which can make it easier for you to get approved or get a better rate on the loan that you are taking out. Okay. So basically, how that would work is that your life insurance policy is serving as an asset to prove your trustworthiness as a borrower. Okay. And so now you do have to keep in mind that if you die before paying it back, whatever you still owe will come off the top before the beneficiaries will see their benefit. Okay. So if you owe $10,000, they're gonna the whoever you use whoever you are in debt to with the loan, they're gonna get that $10,000 first before the beneficiaries get their money. Okay. Now you do have to even see if you can do that with if the loan company will accept that and if that's even possible with the insurance company. Okay. Now some policies do enable you to receive benefits during your lifetime should an unexpected or extreme medical emergency arise, such as cancer, kidney failure, a heart attack. And most policies, it's those, so those policies, those are called accelerated benefits. So it would be for critical illness, accidental death, and there's one more that I can't. It's critical illness. I think chronic. Is it chronic illness? It's like two or three of them, and they normally come included with the policy. Okay. Um, and so most policies with this option will allow you to withdraw anywhere from 25 up to 100% of your policy's cash value. Now, you want to always look and see what is the stipulations behind that, for using the accelerated benefits. And if you get better, um, but then you get sick again, do you have the option to use it again? So those type of questions you want to ask when you are looking at this option to use your accelerated benefits. Okay. And then the last thing is you can surrender the policy. Okay. Now, I don't recommend this at all, just like I don't recommend the withdrawals, but this is an option. Okay. And so when you surrender the policy, you are cashing it out. Okay. And so you are just basically canceling your coverage. Okay. And so when you do this, you get back the cash value that you put in, less any fees that your insurance company may charge. Okay. So if the surrender value is, um, say you have $12,000 in cash value, right? And you want to surrender the policy, then they're going to have fees that come out of that $12,000 before you get the rest of the value of the policy. Okay. Now, some of those fees can be quite high. Okay. You can think of it like an early retirement, an early withdrawal from a retirement account. Okay. So when you withdraw early, then they charge you penalties. Okay. I remember I had a 401k, an old 401k, and I cashed it out like years ago. I was young. I didn't know nothing about I was in my early, I think I was like 25, 26. So I didn't really know anything about it. I knew I had a 401k and I was contributing to it. And then when I left that job, I was like, I don't know what to do. What am I going to do with it? Because I couldn't contribute to it anymore. And I didn't know about trying to move it around or get an annuity. I didn't know anything about that because I hadn't even thought about insurance. And And so I just cashed it out. I surrendered it and I got my money out. And then I had to pay a penalty on my taxes for, when I filed taxes that year. I had to pay a penalty for withdrawing the funds because I wasn't 55 yet, or I think it's 55, how old you have to be, um, to withdraw. And I was pretty bummed about that, right? And it wasn't a whole lot. It wasn't a super large amount, but I still had to pay a penalty, right? And so it's the same concept when you surrender your policy, okay? You still have to pay a penalty, okay? And so with that being said, if you no longer want to maintain the policy and and you have other more pressing needs for the money, then surrendering could be a solid option. But I would say look into a loan first. Don't get rid of the policy if you don't have to. If you have enough value that you can just borrow against and then, pay it back, that would be a better route in the long run financially. Okay. You always want to look at the long term because life insurance and insurance really, period. But especially life insurance is a long-term game. And so you want to always approach it from the long-term viewpoint. Okay. Now, here are some ways that you can use life insurance to help you with your financial goals. Okay. So, one way that you can use this wealth building tool is to diversify your retirement income. Okay. Nearly a quarter of women plan to use life insurance for their supplemental retirement income. And one way to do that during retirement is you can take withdrawals from your policy's cash value during a down market, allowing other investments time to recover. Okay. And the cash value may also provide a way to postpone taking Social Security benefits, allowing those benefits to continue to grow. Okay. Either way, the income from your policy is tax free. Okay. Um, and then you can also use it to close the gaps in education expenses. So if you're a parent, then in your savings for your children's college costs, you may even in all your savings, you may have a funding gap. Okay. Um, and so if you have a life insurance policy that has cash value in it, then you could use the cash value to help cover the tuition. Okay. Um, and life insurance offers more funding flexibility than some other alternatives, such as the 529 educational plans. Okay. All right. And then they're also using it to plan a legacy for their children and their grandchildren. Okay. You can use life insurance to transfer wealth to the next generation. Okay. The death benefit can cover the final expenses without reducing any other assets that you intend as inheritance. Okay. Now, this here goes more into estate planning. Okay. And tomorrow at 6, I have a new video that I'm going to be uploading. Well, it'll be live at 6, and it goes into the five documents that women should have when it comes to their estate plan. Okay. And so you definitely want to check that out. If you are planning on leaving money for your children and your grandchildren and their children, then you definitely want to check out tomorrow's video because it goes pretty in depth on the documents that you need to do that. Okay. Now, life insurance can be a great tool, a powerful tool for passing wealth down to the next generation, especially if you are seeking to create a legacy. Okay. And so, if your goal is to maximize how much you leave to the next generation, cash value life insurance can play an important role in your wealth transfer plans. Okay. And why is this possible? It's because this type of life insurance is flexible and it can be used in a variety of different ways. Okay. So it can help to protect generational wealth. Okay. Um, life insurance proceeds are generally free of income tax to the beneficiary. Okay. It can reduce your estate tax liability. Now, if your estate is large enough, your heirs may need to pay estate taxes, which will reduce the amount they inherit. However, life insurance proceeds can provide the liquidity to pay the estate taxes and other estate expenses, thus helping to maximize the amount going to heirs. Okay. Um, you can also use it to equalize inheritance. Um, which if you have multiple policies, and you have multiple children, you can list the children individually per policy, or, you can break it up however you want to um, with the insurance company. And so that way, if you want one child to get 40% and another child to get 60%. You can set it up that way with the life insurance company. And it's however you want it set up for beneficiaries. Okay. And because you're the policy owner, you have the flexibility to change the beneficiaries of a life insurance policy at any time, whenever you want to. Okay. Um, and this can be very beneficial if you have other assets that are difficult to divide, which will help to reduce the potential conflict between family members and to ensure a fair distribution of wealth. Okay. You want to also think about how you're setting up your beneficiaries, and also how you're setting up your other estate planning documents, because you want to reduce the probability of probate. Okay, probate is not easy and it is very draining on the assets, on the estate. The estate's assets is very draining because if people are contesting and it's going round and round and round, all of those fees is just eating up all of the assets, all of the money. Okay. And so you want to be very strategic when you are leaving your legacy so that it is potentially probate proof. Okay. It doesn't need to be probated because you want to keep as much money as possible within the hands um of your children and your family members, whoever you decide to leave your assets and money to. Okay. Um Also, it's also good for taking care of those with special needs. Okay. Now, if you are the parent or the guardian of a special needs child, like I am the guardian of my brother, he's special needs. You don't ever name them outright as a beneficiary of a life insurance policy. You have to treat special needs children and adults, or special needs adults, um, just like children in this instance when it comes to leaving them as a beneficiary. Okay. You want to have a trust. Um, you want to have a trust. You really want to have a trust and have a trustee because it helps it to be safer for the child or for the special needs person. It's more of a safety guarantee that the money will be used in the way that you want it to be used for them. And it keeps it from being probated, which means that a guardian doesn't have a court-appointed guardian doesn't have to step in and to manage the funds because we all see how, just look at Wendy Williams and what she's going through with her court appointed guardian, okay, and how they pretty much are keeping her from her. She's not able to be around her family the way she wants to, right? So, you have to really think about how you are financially going to take care of your special needs child or family member. A trust is a great way to do that. Now, you want to work with a financial professional or attorney to help you to set up the trust, and then you can establish how you would like the life insurance proceeds to be used upon your death. Okay. Um, and you can do that with a will. And so you definitely want to, but look at tomorrow's video. Look at tomorrow's video because it goes over the documents. And I talk about trust more in depth in that video tomorrow. Okay. All right. So now you also want to make sure that whoever you name as a beneficiary, like you have to keep that stuff up to date, right? Because especially like if you get divorced and you got life insurance. And most of the time, our spouse is the beneficiary, right? Especially if we have kids, we put the spouse as the beneficiary so that, they can continue to take care of the kids, right? But if you get divorced, you have to remember to update beneficiary on your policy, okay? Because you get divorced, you get remarried, you done moved on, you happy go lucky, you die, and you still got your ex on there and not the new spouse, is somebody gonna be pissed off, but it ain't gonna be nothing that they can do because you, as the policy owner, didn't update the beneficiary. So you might have left that man, couldn't stand his guts. Y'all ain't talked no more since the day y'all signed the divorce papers, but because you didn't update your life insurance policy, they got your cash. So that's things you want to always think about. Make sure that you keep your beneficiaries updated. Okay. And so here's some quick practical steps to get started using insurance to build your wealth. Okay. So the first thing you want to do is you want to assess your current financial situation. Um, and see, you want to look at your current assets and liabilities, as well as your income and your expenses. Okay. And this will give you a much clearer perspective on how much coverage you'll need in case of emergencies. Okay. In case, not just emergencies, but also in case of, when you die. Okay. Because you're going to die. As it is what it is. None of us ain't getting out here alive. So, you know, now, also the best time to get life insurance is when you're young and healthy. But if you don't have it, the best time to get it is now. Okay. Um, and you want the amount of coverage you need depends on your family's needs. Okay. So you want to assess your financial situation and the risks that you are willing to take. And then the type of policy that best fits your needs is the one that has the right coverage for your particular circumstances. Okay. Um, a variable universal life policy. Um, that your friend has, you might not you might not be comfortable with that because the rates aren't guaranteed. So it doesn't give you a guarantee. And so you might want something that's where you can get more of a guarantee. And so you may choose to get a whole life policy. Okay. So you just have to look at it from your perspective. Okay. Now, one other thing is don't focus too much on the premium cost, okay? Term life insurance is the cheapest type of insurance and the most appropriate for people who want a fixed timetable for premiums. Permanent life insurance is more expensive, but it also offers greater flexibility and benefits. Okay. And there are a variety of insurance options available. However, you want to look at what am I getting from the policy? Okay. Because if the value that I'm getting from the policy is worth it, then the cost at the end of the day really doesn't matter because you're always going to pay for what you want, right? And it don't matter what the cost is. You're going to pay for what you want. You're going to pay for what you need. Like gas can go up to $7 a gallon. And yeah, everybody gonna be pissed because gas is $7 a gallon, but they still gonna find the money to go to the gas station to get gas because you have to have gas to go where it is that you need to go. Okay. And so it's the same with insurance, right? The value that you place on it, the cost doesn't matter because it has that value to you. Okay. Um, and so, like I said, there's a variety of life insurance policies. And so you want to make sure that you are working with an insurance professional, somebody who understands the policy, who understands insurance, and they can help you and guide you to the right products that would help you to meet your financial goals. Okay. All right, so that's what I have for you in this live. Now, if you don't have life insurance, if you are, or if you do have life insurance, but you are wanting more information about how what policy would be good for you that you can get to build your wealth, then you can definitely book a consultation with me. The link is in the description of this live video, so you can book a consultation with me. Also, if you are wanting to figure out, understand how to calculate how much life insurance you need, then in the description of the video as well, I have my free ebook that teaches you how to calculate how much life insurance you'll need. And it also gives you a calculation sheet that comes with it that you can follow to calculate your need. Okay. And so if you have made it this far, thank you for watching. And my intention is that you found this video useful, helpful, or insightful. And if that is the case, please do consider giving it a thumbs up because I would love to hear your thoughts on this topic. Okay. And don't forget to comment below. Now, if you have any questions or if you have any topics that you want me to discuss, also put them in the comments or in the chat and let me know. I do go back, I read all the comments, I do respond. So let me know in the comments. Okay. And so until next time, remember that no one is coming to save you. And so you have to make sure that you save yourself. All right. Talk to you later. Have a good one.